welcome to your Mortgage Insider Update. It is June the 9th, Monday, following the jobs report from May. Came in better, well, as expected, slightly better than expected in total job creations, which sent the mortgage bond market and the treasury market kind of upside down. Yields higher, just kind of a reversal of a couple weeks of improvement. We'll take a look at that real quick. And prepare for the coming few weeks where we have inflation reports this week from both Consumer Price Index and Producer Price Index. Those are going to come out this week, and then the Federal Reserve will start to come out with their meeting next week, finishing on the 18th. Let's take a look at those charts. So back to 4.5% on the 10-year after coming down after the week following the PCE, or the Fed's favored measure of inflation, which came out here at the end of May, early June. Now that number is for April, so the more recent inflation information is going to come out with the CPI this week. The Fed does prefer the PCE report, but it doesn't come out till the end of the month. And we can see the move higher on June 6th following the jobs report, coming off of a low. So we were 4.35% on Thursday, finished the day 3.39%, just below the 100-day average. Opened the following day right at the average and just up like another set of stairs, leading higher on the interest rate. So that takes us back to levels that we had breached back latter part of May, the second half of May. We've been fighting with these levels for a while. We do have quite a bit of room before hitting this high point that was touched back on April 11th. High point hit on May 21st. We're not quite there yet, but that 4.59% is kind of where we could be going if we have negative numbers with inflation this week. Often we'll look at the mortgage-backed security prices. Now these work in reverse of the actual interest rate. Say the 10-year interest rate of 4.5% is an actual rate, where this is the price the investors pay for the bonds. So let's see what the damage was on the investment side for mortgage-backed securities. And we can see the reverse on Friday, where June 6th we had the fallback right back to levels that we had seen prior back in May. We have been worse off, just like on the 10-year, but this is unfortunately our floor that we could be headed to, again with the CPI, Producer Price Index, and Consumer Price Index both coming out at the end of this week. So we'll keep an eye on it, hope for better days, but until we get through the Federal Reserve meeting on June 18th, we might just be in for a little bit higher interest rates. Enjoy the summer sun this week, and we'll come back next week with an update as we prepare for the Federal Reserve meeting later in the month. Take care.